Hey everyone, welcome to the second episode of Eduloans 101. In this series, we talk about nationalized banks, private banks, and international lenders. We do not hold back. If there's something good, we'll mention that. If there's something shady, I'll mention that as well. Alright, before we get into this video, I really wanted to quickly pitch in our Discord server. Our Discord server is booming. We have over 4,000 people. I personally do staging sessions. I personally do voice sessions, and it's so easy because you will be able to find people who have taken loans from other banks, who have taken loans and who are going to some other universities, all of it. So that link will be in description below. Go check it out. I was in your place exactly 4 years ago where I was confused. What is going to be my interest rate? What is moratorium period? How much money do I need for my education loan? And all of these questions, and also the biggest question, would I be able to pay back or not? And those questions and that knowledge which I got kind of turned into this Eduloans 101 series. In this video, we are going to cover HDFC Credila. HDFC Credila is a very, very prominent name in this industry, in the education industry, or in the education loan industry. Everybody, whenever they are planning for a loan, they'll look at like two, three big partners. SBI would be one, and HDFC Credila would be one. In private banks, I don't think anybody stands over HDFC Credila. So that's a great thing. And in this video, we are going to cover the following 6 points. We'll talk about HDFC Credila a little bit, which we already covered in a way. Second would be, are you eligible for a HDFC loan or not? Third would be the numbers, the interest rate, the moratorium period, the tenure period, and the amount of loan which they will give you. Fourth point is pros and cons of taking a loan from HDFC Credila. Fifth point is how to apply. And sixth point is summary. The second point is, are you eligible or not? Now, their eligibility criteria requires you to be an Indian citizen. If you're an international citizen, or if you're a non-Indian citizen who's watching my videos, HDFC is not the right option for you. I picked up some eligibility criteria from their website, from Credila's website. It says borrower must be Indian citizen. Second would be co-applicant must be an Indian citizen. Third is co-borrower must have a bank account in any bank in India. So that's a given. And in case of here, what they mean by co-applicant is if your parent is co-signing your loan, that's the co-applicant here. They need a confirmed admission in the colleges before disbursement. So this line can confuse you a little bit, but don't worry about it too much because they're saying that you need confirmed admission before disbursement. So you can start your procedure early on, even when you don't have a confirmed university you want to go for. But once you confirm the university you're planning to go in August, then that's a single eligibility right before they will disperse the loan amount. Number 3, how much loan they can provide. Credila says that they can offer 100% cost of attendance. Now, they do not have the concept of margin money, that's what they say, but they are still writing that they can fund up to 100% of cost of attendance. So that's a good thing. Now, I want to tell you a little bit about the play of words here. Alright, let's say your fees is 40 lakhs and you're planning to get a loan of 40 lakhs. Usually there's a concept of margin money in different other banks. What margin money is, there's like a margin money could range anywhere between 5 to 15 to 20% depending on how risky does the bank consider you. Let's say you go to SBI and you're planning to take out a loan of 40 lakh rupees. They say that 10% of that amount would be a margin money. So in that case, 4 lakh would be your payment and 36 lakhs would be from SBI. So you have to match that 10% payment. In case of HDFC, they say that there is no concept of margin money. That means if they are approving you for 36 lakh rupees, they will give you 36 lakh rupees and they are not expecting any kind of margin money from your side. Now remember that margin money is not given to the bank. It's basically put into that loan account of yours so that the bank sees that you're putting in some of your money as well and they are putting in some of their money as well. So it's just a security thing. But it's a good thing that HDFC doesn't have that margin money concept. Next, talk about interest rate. What is the interest rate? A lot of people compare loan terms based on interest rates. Yes, that is a major factor, but there are a few things which you should be careful about, and I'll mention that in the video later on. So interest rate can range anywhere between 11 to 13%. I have seen going it over 12%, and I've seen people getting it under 11% as well. If you have a collateral, of course, your interest rate would be lower. But if you have a collateral, I would recommend you to go for SBI, honestly, just because of the better interest rate. But again, as I mentioned before in Prodigy's video, weigh in all the options. Look at HDFC Credila as well, look at SBI as well, look at Prodigy Finance as well. See and look at other lenders as well. I'm just not measuring these three. Look at other lenders as well and see what best interest rates, what best terms you're getting at. Okay. So the interest rate can vary anywhere between 10 to 13%. They don't really mention what is the exact interest rate because it depends on person to person, if you're putting in a collateral or not, and all of those factors. What is the 10-year period, you ask? A 10-year period is in how many years you have to pay back your loan. So HDFC allows you to pay back your loan in 15 years. Okay, let's talk about administration fee, or what you call processing fees. So the processing fees can range anywhere between 1% to 1.25%. That's the best I know. I have asked a few students, usually it's like 1 to 1.5%, but it really depends on your branch, it really depends on your particular case. But 1 to 1.5% is your best bet. Alright, fourth part of this video, let's talk about pros and cons of Credila. Let's talk about the pros first. I think the biggest pro, which a lot of people kind of undervalue, is that HDFC is such a prominent name in this space that you don't have to worry about the legitimacy and about the funds which you will receive. Okay, you know that HDFC has the money to fund your education, so you don't have to worry in that sense. So that reputation and credibility and the respect which the bank has built over the years, it's of course one of the biggest factors why a lot of people consider HDFC, because sometimes they're okay to pay 0.5% or 1% extra interest rate just because they know it's more credible, it's more. Second, the interest rates are comparatively lower than other NBFCs. When I talk about other NBFCs, I'm talking about Incred or Avance, comparatively it's lower in some cases. Third, process is a little overwhelming, but the pro here is that they have a lot of agents all around India which will help you put together all the documents. They'll come to your house and they'll help you put together all the documents even before you have gotten your final admission into the university. So that kind of eliminates you going to SBI, because I took a loan from SBI and it was such a nightmare, because you go there and you are kind of fighting with them about small things. Currently my sister is also in the process of taking a SBI loan and she is going through the same thing. So that stress about application and filing in what documents you would need, that gets thrown out because there's so many agents helping you. I know they can be sometimes pushy, but you have to understand these agents work on commission a lot of times, so they have to be pushy. But the best you can do for yourself in this case is have that knowledge of all the terms and conditions of your loan. That way you will be able to understand what your loan terms are in a better way. Number fourth, one of the bigger factors with Indian banks and Indian NBFCs is that the tax benefits. So if your parents or if anybody is paying your interest rate during your moratorium period, a moratorium period is while you're still studying and they don't expect you to pay back any kind of loan. So let's say you just pay your interest during that time, during the moratorium period, you get a tax benefit. I'm going to leave a link in the description about this article. You can read more about it. That's a big pro, because my father paid the interest during the moratorium period and that gave him some tax benefits at the end of the year. So it's definitely a good way to save some more money. And the fifth one, the biggest pro, is of course no collateral. There is a co-signer, but that's kind of same across all the banks and all the NBFCs, that you would need a co-signer or a co-applicant. It's just the risk model of a bank. They need somebody to co-sign your loan because you're still a student. Alright, let's talk about the cons. Number one would be higher interest rates as compared to SBI or other nationalized banks. Another con is the process can be intimidating because the agents can be pushy sometimes. But the best way is to educate yourself and get through all of this process. And you should be the more knowledgeable person here, because maybe your parents are not, because you have to pay back this loan. So don't get into the trap of getting a 14% of rate, because you can always negotiate rates also. I've seen people negotiating their interest rates. And that's about it. I couldn't really think of any major cons with Credila except for the higher interest rate, and the guys can be pushy sometimes. It's definitely a great option if you do not have a collateral, because they will fund you for a very high number as well. The fifth point is how to apply. It's a pretty easy process. I think you can just apply online, or you can call up Credila and tell them like, hey, you're looking for a loan. They will send an agent to your house. You submit all the documents, you upload all the documents either online or give it to the agent, and they will start the process, and then they will just lead you through the process. So the process is pretty simple. It can take a little while before you get the interest rate, but again, they have relationship managers. Each and every person get a relationship manager, so that's a great way. It's a great customer service, honestly, if I tell you. And it makes sense because they're charging a high interest rate, so it's definitely an easier process as compared to nationalized banks when it comes to Credila. Alright, let's summarize the whole thing. Okay, summary would be, of course, Credila is a prominent partner. It's one of the best options you have if you do not have a collateral. They do need a co-signer, they do need a co-applicant. That's the same person, your parents or someone, your uncle or someone in the family who can co-sign your loan. They do not require a collateral. If you do give them a collateral, that will decrease your interest rate. Their interest rate can vary anywhere between 10.5 to 13% or so, depending on your case. Again, it's depending on your case. It's nowhere written on the website that what kind of interest rates they provide. So I think it's really per person and their credit assessment and their parent salary and their co-applicant salary and all of that factors add up. You can pay back your loan in 15 years. Their moratorium period is again 2.5 years. Moratorium period is when you don't have to pay your education loan while you're studying. So that's also good for you. The process is easy because there is always a relationship manager attached to your case. So they make the process easy. The only con which I see with relationship managers is sometimes these guys can be pushy. Try negotiating the interest rate if you can. It will be good for you. Of course, know all the terms and conditions of your education loan. That's important. And one thing which I've been telling you and telling everyone from day one is know how much money you're planning to get and how much interest rate you're getting, and calculate the payments you will be getting afterwards. I'm going to leave a link of an interest rate calculator and an Excel sheet I made. Calculate how much. Let's say you're taking a $40,000 loan and you are going to start paying in 2 years. Calculate first of all how much interest you are accruing on that $40,000 when you have disbursed that amount, and then calculate once you start paying back how much time it will take you to pay back. Again, the faster you will pay, the better it is for you. My roommate Himanshu, he paid his loan back I think within like 6 months or 7 months after graduation. He was like, let me pay. He actually borrowed money from somebody else and paid back his loan because he had a higher interest rate and he didn't want to pay back a lot of amount, like a large sum of money. So again, it makes sense to pay back quicker, as quick as possible. Alright, that's my thoughts on HDFC Credila. Again, take care guys. Thank you so much for watching this video. Put down all your questions in the comment section below. Join our Discord. We are booming there. Thank you so much guys for watching this one. I hope you liked it. Take care, and I'll see you in the next one.